supply bottlenecks very much weighing on Europe's largest economy. In fact, the whole of the Eurozone as well, certainly a factor. The conversation is pretty straightforward. It is growth fading? And the IMF talked about this. And is inflation picking up? Now, it's hard, I think, in my mind, to talk about stagflation when you have growth that is so far above potential. But maybe we go next year into a slower growth environment with higher inflation. Let's figure this out. Where are we? Is this whole conversation about stagflation useful? Bilal Hafeez, Macro Hive CEO and founder, joining us now. Bilal, your take. Where do you stand?
Well, where I stand is I think the clearest signal we're getting is that we're having a loss of growth momentum overall. I think that's the clearest thing. On the inflation side, I think the picture is much more difficult to ascertain. Certainly, we are seeing very high inflation in some segments of the economy. But at this stage, it's really in all the supply-constrained parts of the global economy, whether it's chips or whether it's commodities. Outside of that, I still don't think that we're seeing broad-based inflation. So for me, the clearest thing really is we're seeing more and more signs of weaker growth and more shocks that will lead to weaker growth. And energy is the latest thing that is impacting growth in a negative way.
So is it fair to say slowflation versus stagflation, and that obviously the position and the aftermath of that will be different?
Yeah, I think so. I mean, for me, I think we're more in the slowflation environment, and I think that
she makes
is
words
the challenge.
Up.
I do. I make words up.
Yeah, it's getting quite confusing now. Slowflation, transitory stagflation. Guy, I think you were saying earlier, trans-stagflation. So there's all these sort of different terminologies we can use, but I think that's the bigger challenge here. How do you deal with all of these supply interruptions, and how will markets respond to that?
Should central banks be tightening in this environment?
I don't think they should, but obviously there's a lot of pressure for them to do something because headline inflation is very high, and that's the types of numbers that the average person on the street will react to. And certainly if you look at surveys across the US, people are starting to view the inflation levels that we're seeing as a negative factor. So there is pressure politically for central bankers to do something, but the reality is that it's not easy money per se that's leading to higher inflation. It's really supply chain issues that is leading to higher inflation. So if you want to moderate that inflation, you have to have some kind of supply side efforts to bring that down.
So what's going to be the impact, and let's just stay with the BOE for a second, as it does feel like they're going to be somewhat of an outlier, particularly when it comes to sequencing. RBC says you could see 130 on the cable rate on this kind of policy mistake. What do you do with that?
Yeah, I think that's absolutely right. I think the UK in some ways is facing the worst mix of everything. It has relatively high inflation, similar to what we've seen in the US, more so than, say, the Eurozone, China, or Japan. Moreover, it's, of course, suffering from all the supply shocks. Then on top of that, we're seeing the full effects of Brexit as well. And I think one of the interesting things about the UK was that because Brexit happened at the same time as COVID, it was hard to say whether Brexit was having any impact because the COVID effect was so strong. But now, as the lockdown restrictions have eased, we're now starting to see the negative impacts of Brexit. So we're seeing an additional shock to the UK, negative shock, which is coming from the trade side. So my sense is the UK's biggest challenge right now is on the growth side. And so the question here is, how do you stabilize growth rather than worry about inflation? And I think there's a real risk that the Bank of England is making a mistake here if they do hike.
Bilal, I want to go in the direction of what's going to happen with the upcoming earnings season, and I'm trying to figure out whether or not actually Europe and maybe the UK is really kind of at the epicenter of all of this, but Europe is more exposed to these negative narratives that are coming through in terms of energy, what's happening with the supply chains than the United States. And I'm trying to figure out, in terms of what I'm therefore going to get from the earnings season, whether or not actually US equities, in terms of their guidance, are going to be outperforming what we're seeing in Europe.
Yeah, I think that's absolutely correct. I think the challenge for Europe is, or Euro area, is that they're suffering from the energy shock, which the US isn't in the same way as the US has its own energy production. It also suffers from a China slowdown in a way that's more acute than, say, the US or even the UK as well. And then also the other challenge, I think that's probably a bit more subtle, is the fact that Germany is in the midst of forming a new coalition. And so there isn't an obvious fiscal policy response that we can expect anytime soon. We need a coalition to be in place and for announcements to be made, and that will only really happen towards December. So I think the Eurozone is particularly vulnerable in this environment. That doesn't mean the US won't also have a challenging earnings environment, because certainly if you look at earnings expectations for this current quarters of earnings, it will be lower than the previous quarter as well.
So, yeah, a relative play on that. So the move where we've seen money flow into European assets, particularly as the value trade kind of overtook the growth trade, do you think that that unwinds? And if so, like, where does that money go?
Yes, I do think that will start to unwind. I think the European trade in reality works really well in a reflationary environment where growth is picking up. The yield curve is steepening more because of growth prospects improving in a kind of generally a good environment. The current mix of everything is not necessarily the right environment or the best environment for Europe, especially the industrial sector in Europe. And then at an associate level, the financial sector will also struggle if the industrial sector is not doing so well. So I think the money will start to leave Europe, and it could potentially go back into the US tech safe haven type trade. So I think that could be one flow that we could see in terms of equity flow. Alternatively, it could just simply go into cash, more kind of risk averse type environment. And of course, it will go into crypto as well, as we kind of have to recognize that as well.
In relation to the green bond story, and then we can definitely hit these Clarida headlines with you as well. Do you want to own a green bond issued by the EU? Do you want to pay up for that?
Well, I think it depends what your underlying mandate is as an investor. I mean, certainly there's a huge amount of pressure from asset managers to have exposure to ESG and to have exposure to green bonds. And so the EU issuing these bonds and becoming one of the largest issuers, and there's a clear green taxonomy, it's a very sort of safe thing for investors to do, to buy these bonds, have exposure, and have the confidence that the bonds you are buying are green, according to one of the leading, environmentally sensitive regions in the world. So from that perspective, I think it makes a lot of sense. Whether it makes sense from a pure returns perspective, that's less clear cut, because these bonds trade at what's called a greenium, which means that their yields tend to be a bit lower than a normal bond of a similar credit rating, so your yield will be lower. So I think it's useful if you have a mandate and it's an easy way to get that exposure, but from a return perspective, it's less interesting.
How inflationary? We're about to spend a lot of money moving society to a more sustainable future, Bilal. The money that is being raised here is going to be used to drive that. How inflationary is that process going to be? Do we actually have our arms around sort of what is going to happen? Because we've got a lot of money, we're raising a lot of money in the bond market. The EU in particular is determined to make this transition. It wants to make this transition relatively quickly. My concern is that A, this is inflationary, and B, that society is not quite ready for it. We're seeing what's happening with energy prices at the moment. Do we yet have an understanding what the economic impact of this is going to be?
I think you're right. I think we're only now starting to get some sense of what the economic implications are. I mean, for me, there's kind of two channels through which this has an impact on the economy. One is it leads to potentially higher growth, because if governments invest in the green sector that would not otherwise be invested in by the private sector, that creates new end sources of demand. But the more difficult side is, what does it mean for your existing use of energy? And you end up with all of these strange dynamics where in Europe needs to increase its investments in industrial size of batteries to promote the use of electricity as cars go electric and so on. But the Europeans won't buy those batteries produced in Asia, because those factories that produce those batteries in Asia are powered by coal. So you end up with a shortage of batteries in Europe, which means that you can't have the electricity that you need to power electrical vehicles. So there's all these sequencing issues where if you take a purist approach where you don't want to have any exposure to coal, then you don't build the infrastructure you need to allow this transition to happen. And I think that's the challenge which we're in right now, where there's a sequencing issue of, you do need a lot of energy to transform the energy system to a new one. But how do you power that transformation? And renewables alone won't be enough to do that.
So how do you make money off of this, Bilal?
Well, the way to make money off this is to understand that in the end, paradoxically, there will be a lot more demand for fossil fuels than people would initially anticipate. So there's been chronic underinvestment in the fossil fuel sector. And, if you end up in a world where there's scarce energy resources, those assets, those commodities will be bid up. So that means you need exposure directly to those commodities, whether it's oil, natural gas, or you need exposure to the energy sector in general.
But coming full circle, Bilal, as we suggested at the beginning of this conversation, there are many PMs, the managers that have ESG mandates, and more people have them, that prohibit them from investing in those areas.
That's right. So this is where the challenge will be. So those managers will have to accept some underperformance over that period of time. I mean, of course, there are so-called sort of green sectors like tech, which may still perform well, but they'll have less of a universe of assets to investing that could potentially be profitable. So it'll be more of a challenge for these ESG investors. And at some level, there has to be this recognition that if you do have a sort of a non-profit restraint or constraints on your allocations, then you will have to accept lower returns as well.
Okay. We're going to leave it there. Bilal, great to have you along for the ride today. Thank you very much indeed for spending so much time with us. Bilal Hafeez of Macro Hive, thank you very much indeed.